Hi guys, this is the founder of Building Wealth Investments Inc. Welcome to my YouTube channel. Thank you for taking your time to tune in and to watch this video. While you're still on that, hit the like, subscribe, and notification button so that you get notified every time I upload a new video. With that said, let's get into it. So today I'm going to do a quick market overview. I'm just going to pretty much share my insights on what I will be expecting to see happen based on the current price action, so that we can make advantage of the upcoming opportunities that are going to present themselves in the coming week. So to start off with things, I'm going to look at the dollar index, and it's a pretty important part that I do so because it helps me to understand how the counterparties that are trading against the dollar are going to react due to how the dollar itself is going to react due to other fundamentals that are occurring around the world right now. You understand? So, also looking at the structure will give me an idea of what to expect to see happen in the later stages, or what will happen in the next coming week when the market opens on the pairs that are trading with the dollar or against the dollar, for the dollar or against the dollar. So if you see that the dollar is on a downtrend, for example, then you would expect to see a currency trading against the dollar going on an uptrend. So it's pretty much a vice versa strategy. It's that simple. There isn't much to it, but it's important that you make sense of what is happening to the dollar as it holds more weight in this whole strategy to begin with. You understand? So, okay, let me not talk too much. Let me get into business and just analyze what I'm expecting to see. So, to begin here, to start off things, I'm going to mark my area of significance, or the area of mass psychology. This is where we expect a whole lot of people to be trying to take a decision on what is going to happen next, and this causes a whole lot of frustration within the market, and a lot of people get kicked out, and a lot of people, they make a lot of money. Not even a lot of people make a lot of money because there's a rule that says, it's crazy that it is a rule, but it is what it is. But it says 90% of traders lose 90% of their capital in 90 days. So that on its own just goes to show you that not everyone is winning in this game, and it is because of this area here. Not particularly because of this area, but there's a reason why it is called an area of mass psychology. I'll break that down at some point in the later stages when I upload more videos. But I just want to give my market overview insight on what I think is going to happen in the coming week. So let me not dwell much on just rambling and saying a lot of unnecessary stuff. But to get to the bottom of the whole point of this video, let's continue. So, okay, I'm gonna mark my area of significance. This is where I expect to see the market go, because we can see that we have some liquidity that needs to be grabbed within this area. You understand? So we know that, okay, when the market takes out a low, you understand, it must also come back to take out a high. So the market pretty much moves, I wouldn't say sideways, especially when it's in a trend, but there's a reason why it is going up, and there's a reason why it is going down. You understand? I don't really know much about the liquidity grabs and whatnot. I haven't really studied that much, but I pretty much have an understanding of what it may be. You understand? So, okay, I can see that, okay, we've been on an uptrend uh, on the dollar for quite a few months, actually since 2021 up until 2022 August, and we've just been going down. But this doesn't mean that we were changing direction. You understand? Because every time the market goes up, it needs to breathe, and every time the market goes down, it needs to push a little bit up to breathe. You understand? So okay, me looking at this current price action, I can see that okay, we had an impulsive move, then we had a correction, and then we had an impulse, and then I would consider this to be more of a retest, even though it is a correction, but I would consider this to be a retest. And now we're looking to come all the way up to this point here. And also, the market is creating a series of higher highs and higher lows to also indicate to us that we are on an uptrend. Another thing that I should give to you is that we can also see that here the market was pretty much ranging, going sideways. We were in a ranging market. So the best thing that you could have done at this point, although it would have been unrealistic for you to wait all this time, you understand, just for you to capitalize off this move here, because I can really see a bullish move occurring here, something like this. Let me zoom out. So yeah, that's pretty much what I'm seeing. I can see the market heading up to this point. Yeah, so this is the monthly time frame. So I'm expecting to see the market come to this point in the longer run. So that means I'll be looking for selling opportunities also on the currencies that are trading on the currencies that are trading against the dollar. Because if I'm seeing a bullish move, that means I should expect to see a bearish move on the currencies trading against the dollar. That's pretty much the whole strategy. Understand? So okay, I can see now that okay, on the monthly time frame, it is indicating that okay, we are on an uptrend. And also to confirm that, let me just remove this real quick. Also to confirm that, I can see that okay, when the market broke this previous high, before we had this previous high, okay, we had this high here, of which the market failed to come to and also to break. You understand? So it came down here to this sell side liquidity, to grab the sell side liquidity, or to our no demand zone. Yeah, to our demand zone. And from there it started buying, gave us a double bottom. Okay, sharp. Okay, that's not necessary, but okay, that's what the market did, right? So I'm mostly interested in what happened after it broke here. So at moments like this, what I like to do is I'd like to measure if this is a retracement, and I want to see if this candlestick here played on okay. So okay, I can see here that okay, this area here was quite a significant area, and this is the previous high that we had, of which got broken. Not only this high, but also this high here, of which got broken. And then we can see that when the market came and retested this area, it just continued to shoot up. It came also, failed to continue going to the downside, and then it went up again, came, rejected, went up again, and then tried to continue going down. But we can see now that we have a change of character within the market, and I would expect the same thing to happen here I would expect to see the market retrace to my golden zone before continuing to the upside. Because also I can see that on the weekly time frame we broke out of this structure here. This was a nice descending type structure, a falling wedge. Uh, okay, so I can see that okay, we failed to close. If the market had closed below here, below this area, below this area here, and then closed somewhere here, I would have considered to sell because I don't really understand this strategy myself. But this is something that I've been back testing for quite some time, so I don't even know what name I should give this and why this happens. Maybe someone who is more of a professional than me, who knows why, will explain to me why this happens. But there's something about uh, when a high of a I don't even know how to explain this. I'm sorry to whoever was listening. I'm sorry, but I wish I could share this the way I see it. But there's something about when a high has been created and then it has been broken. I tend to look at the previous bullish candlestick, in which case it would be this one here, right? In our case, it would be this one, this candlestick here. And there's something about this that I don't understand, because when the market enters that point and it fails to break, it's most likely going to buy. I don't know why. Or vice versa, when you're in a selling perspective, it's most likely going to do the same. You know, and that is how I place my stops. Let's say if I were to enter here, and this is powerful on the 1 minute also. Like you get like a very um, small stop loss. You find that you're risking 0.30 pips. Or no, not even 0.30 pips. Like imagine you'd find yourself risking like 3 pips on gold. How crazy is that on a 1 minute time frame? So if I were to enter this position, this is where I would put my stop loss just below, or probably to be in a much more safer position. I would put it just below this week here. So if there's someone who can explain this to me, I would really appreciate that because I don't know why, but it works. It works. Maybe I'm the founder, who knows? Maybe I'm the founder of this strategy here. So I have to give it a name ASAP before someone comes out and checks it. Say they the founder, and then they claim to have given birth to it, whereas they saw it here. Because you never know. You never know who's watching. Okay, so let's continue. Now, okay, you can see that our edge, we had our, what you call this, our support, our weekly support. And how did we get to our weekly support? Interesting. So same thing with this one here. You see this candlestick here? This was the previous high. It broke, but for some reason I wouldn't what you call this, I wouldn't sell. I wouldn't what you call this, I wouldn't buy if it were to come and close below here. I wouldn't consider buying, but I would buy if it approached this area structurally in a way that I can make sense that okay, we came here in a descending channel, you understand? As compared to in a series of a trend whereby it's creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Understand? So okay, I can see that okay we have our nice structure here. Let me remove this on our daily. So this structure got broken. We had an impulse correction, and then first touch, second touch, third touch, the market shot up. Now I'm interested in seeing how it's going to break above this high here. Let me go into the lower time frame. Did it break? I'm more interested in this candlestick that is here, since it is our previous, this candlestick here, since it is my previous high. Okay, so I can see that okay we had an impulse. We broke out of this trend line here, and then we had a rejection after tapping into our support, our 4-hour support, and then we got like a bullish close, not even a bullish close, but some type of like a hammer candlestick, a bullish hammer type of candlestick. I'm going to the 1 hour. Okay, in the 1 hour I'm seeing something different here. Okay, I can see now that the market is creating a series of lower lows, lower high, lower low. So this may be a lower high, and then understand, lower low, lower high, lower low, lower high, lower low. But it wouldn't be. I'm not yet convinced. Not yet convinced. So let's say I was in the market right now looking for an opportunity. How would I approach this current price action? Because I'm pretty much seeing that okay. Let me see in the 15, the 30 minutes. So in the 30 minutes, okay, I can see that we had our resistance, broke out of our resistance, came, this then became our support, came to our support, shot up, broke our support, became our resistance, came to our resistance, rejected, came down, and then shot up, came to our, what you call this, to our, broke our resistance, which is now our support, and then we may see a bullish move. We may see a bullish move, but I'm not yet convinced because this might also be a retracement. Let me do this. I think I'm seeing something here. Okay, yeah, this may potentially be a retracement, and then we may see a push to the downside. maybe to this area here, 50%, or to this area here, which is the 61.8%. So this could potentially be a retracement, but if anything happens, I'm pretty much prepared, because if I'm looking for a buying opportunity, I would wait for a break, clear breakout, retest, continuation to the upside, take advantage of this here. Or if I see that, okay, um, this is a retracement, then I'll pretty much wait for it to retrace, because it's not worth. I mean, the setup. Let me see something. I mean, you could catch a few pips, but is it better than the long term idea? Let me see. You know, another thing is you shouldn't be stepping into the market to make a quick buck. Enjoy the process. A good friend of mine named King, was telling me this. I think it was yesterday. He was like, it's more in the process, and I've had this before, and I've instilled it in me, and for him to remind me, I really needed that, because we are really obsessed with the final product, and we forget that we are gonna need the process to maintain the product. You understand? So if you just have the product without having a system that produced that product, then when the product gets used up, what then are you gonna do? You understand? What then are you gonna do? Because you do not have an understanding of the processing that it took place for that product to be in existence. So as much as we are looking to go to the destination, let's just enjoy the moments that we currently living in, and not just enjoy them, but make the most out of every opportunity that we get. You understand? So when I speak of looking at the long term idea, it's because a lot of people are not patient. They're not patient when it comes. I spent like 20 minutes already on this. A lot of people are not patient when it comes to waiting, and allowing the market to do its thing, to see if what I'm seeing is really playing out as I expect it to play out. And if it does play out that way, it's gonna be crazy, because okay, instead of taking this setup here, we can see, let's say our overall target is here. Let's say our overall target is here, and then remember that idea of a stop loss. Look at how it's been rejecting here, so I'd put my stop loss pretty much right above here, right? This is the trade I would take, like, without thinking about it. So this setup to me is pretty valid. I wouldn't go all out on it though, but it's a valid setup for me, based off of my experience, and off of how I've seen the market move, the Fibonacci retracement whatsoever. Like, this is the strategy that I sometimes use, you understand, to make sense of whether we're continuing, or whether, you get the idea. So someone wouldn't be patient enough to wait for these two setups to play out. They would take this setup, and if it doesn't play out, you've already so taken an unnecessary loss. Whereas you could wait for high probability setups. You understand? Because let's say the market really does play out this way, and you take your position from here, you put your stop loss here, and then take it all the way up to here. Look at how different is the risk to reward. You understand? Look at how different the risk to reward is. Or if you were to take, even if you were to take it from here all the way up to this high here, the risk to reward is still crazy as compared to just taking this setup, you know. So okay, I've made sense of what I'm expecting to see. Let me also break down something real quick. Let me go on gold. Gold did some crazy things last night. Gold did some crazy things last night. I'll also teach you a thing or two about this is a strategy. It's not just here for for decoration. It is a strategy, and it is mind blowing. I'm not gonna lie. You know, especially for when you're swinging trades. It is crazy, crazy strategy. So gold right now, I don't want to spend too much time analyzing, but you can see I'm expecting to see gold come to this point here. I don't know if I should break down the analysis because I've already spent like 26 minutes talking about the DXY. But it's about the process, you know. I hope you've gained value in the insight that I shared with you on the DXY. Because as much as I may not be showing you profits, money, and all that, there is more value in the skill itself than the money. You understand? So it comes down to your perspective, to be honest. If you're after the money and you're expecting to see it here, then I'm sorry. But if you're after the skill, I'm telling you, you're gonna gain a thing or two. To be quite honest with you. So if I measure this impulse here, I could see gold coming to this point. Okay, let me start off with the 4 hour. Let me remove all these things real quick. Let me do this real quick. So I'm gonna start off on the 4 hour. If you want the strategy, yeah, man, come on. You already know the strategy by now. If you just want the strategy, watch my previous videos. You're gonna learn something. Because I pretty much do the same thing every time. It's just that I just add a little bit of touch ups there and there. Because I'm learning every day, you understand? So some days I'll present new things. Some days I'll also refine the things that I know, and then they'll appear as though they're different, although it's the same thing. At the end of the day, price action is price action. It doesn't change. So I could see gold coming up to here to this point. Now for our so I'm just looking at it as someone who is looking for an opportunity. Understand? So I can see that we've been in a series of higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You may come and get a higher low here before continuing to the upside, but I'm mostly interested in the recent structure. So I can see that okay, in the 4 hour we broke our previous resistance impulsively slow, and we may potentially head to this point here to grab the buy side liquidity. So at this point, to be honest, I'd just be waiting. I'd just be waiting, cause already it's gone. It's gone. I wouldn't be looking to jump in, and I'd wait for you to to form a higher low, break that higher low, and then take advantage of that situation. Dive in lower time frames, go in the 30, go in the 15, then the 5, then the 1 minute. There's a lot of information in the break itself. You understand? There's a whole lot of information. So I'll just be looking at it, monitoring it, but I can see that okay, we are clearly on an uptrend also on gold. We're clearly on an uptrend. So this may indicate that on the DXY, we may have that push to the downside. We may have that push to the downside on the DXY, just based off of what I'm seeing on gold, because gold trades against the dollar, right? And if gold is showing such a strong bullish move, then I would expect to see a bearish move on the DXY. And then, yeah, that's pretty much it for the setup for next week. It may even continue just like going up, when the market opens, find that there's a gap, just shoots up and miss that move. But then if you miss that move, just wait for something. The market also always is always moving. Something is going to present itself. What else am I gonna look at? Nasdaq. Uh, I wonder why I took a buy here. I wonder why I took a buy here. Cause this was quite clear, bro. I hate it when sometimes you like sort of like go into a losing trade, and then after the market plays out, you get to see the setup to be like, oh shit, I should have approached it like this. I should have done it like this. I should have ignored this and that, because I can clearly see that this was a evening star pattern. Understand, which indicates a reversal. Look at this bullish candlestick, a doji candlestick, then a bearish candlestick. Like, come on, man. Like, how clear is that? It is as clear as day is daylight, and I completely ignored it. But also, because also I'm looking at something that I'm also seeing is this. I'm also seeing this head and shoulder type pattern. Look at all this information. Like, how did I ignore all this information, bro? Only to come up with this. I don't know why I ignored all this information. Because also another thing, the Fibonacci, 50%. Like, and then it's like, what was I thinking when I bought from this area? Like, what was I thinking when I bought from this area? But it's fine. It's fine. I've learned. I've learned. Also, here took me out at break even after this bullish candlestick here. Put my stop loss at break even. Took me out at break even, and then the move came on afterwards. It shot up afterwards. I think I was not present at this moment. No, I was not present. I wasn't watching. I could have caught this move here. Oh, but there were some good trades this side. Understand? But this one here, hey, it's very very questionable. This one to me was kind of valid because I was seeing a first touch, second touch, third touch, and then we had this bullish move, and I was like, we're going to the top. And also, To be honest, I should have just let it go here, especially after I took out this high. I should have let it go. Going back to what I was saying about the market taking out the buy side liquidity, and after it does that, it does what? It comes to take out the sell side liquidity before taking out the major. You understand? So yeah, that's pretty much it. What else do I have to go to? GBP USD. It's been a while since I entered GBP USD. But GBP USD has been crazy though. I'm not gonna lie. Like the setups have been. Look at this. The setups have been crazy. The setups have been crazy. I saw this from a higher time frame perspective. As you can see, the 4 hour time frame. So it may come to this point. You never know. You never know. But I'm also seeing that okay, here we have this sort of like have a change of character here in the 1 hour. But does it hold weight? I don't know. Because you can see that okay, we're going in a series of lower lower low, lower high, lower low, and then we had a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we broke this previous low. So in my understanding, I would say we're coming to take out this sell side liquidity, and now we are in our area of discount or premium, but doesn't match. It doesn't match. This, those are just fancy stuff which I don't think are necessary for you to know, but it helps for some people use those concepts. These are concepts that I learned like I think a year or a year or like 2 years ago, and they still stuck within me. So I've come to an understanding that as traders, as much as there are so many concepts out there, we're pretty much looking at the same thing. Whether it's liquidity, whether it's a fair value gap, whether it's what, whether it's a silver bullet, all those concepts. I trade the Falcon strategy, which is pretty much looking at patterns, area of my psychology, whatsoever. You understand? Market structure, pure price action. I would say how the price moves, all that. That's what I trade, and I've come to understand because I started by learning other concepts before I went to the Falcon strategy. I was just learning other concepts like ICT. What other concepts did I learn? SMC. Those white curve strategy. There's a bunch of strategies out there, but they're pretty much the same thing. The most important thing is structure. They all come down to you understanding how structure moves, and let me break it down for you to show that I'm not just playing here. To show that this is real, bruh. This is some real shit. So okay, here's my take. When the market opens, buy GBP USD. Just buy GBP USD. Buy GBP USD. When the market opens, buy GBP USD. Buy GBP USD. If you want to be on a much more safer side, you can wait for it to break out of this range, tap into the range, then continue going up. And if it does otherwise, I can see that okay, we have this huge bullish candlestick here. If it closes below this candlestick here, we'll be looking for selling opportunities. So that's pretty much my analysis on GBP USD. I won't do much on that. I won't do much on it. I won't do much on it. if you were to enter a buy now, since I'm saying buy, what buy GBP USD. If you were to enter a buy now, this is how your setup would look. At 12 o'clock, don't go to sleep. At the minute the market opens, just buy GBP USD. Okay, so my stop loss is below this previous bullish candlestick that created this whole move here, and it has been failing to break below. As you can see, it has been failing to break below. This was a correction, then it went up. So yeah, 5 minutes. Let's go into the 5 minutes. Okay, in the 5 minutes I can see we have an impulse correction. If you want to protect your capital and risk, and have a low risk, a very low risk, high reward setup, you can have your stop loss. Yeah, 6.8 pips. Like how crazy can this get, bro? 6.8 pips to get like 167 pips. So for example, if you had $100 in this case, and I were to open a one lot size in a micro account, I'd pretty much be risking $60 to make $1,607. How crazy is that? Yeah, pretty much be risking it. Let me do my math. I don't want to embarrass myself. Let me pull out the calculator. Let me pull out the calculator real quick. So 167 times 10, yeah. Now if I were to open a one lot size in this position, no, 0.01, risking I'd be risking 60 cents, and then 0.10 I'd be risking $6, and then one lot size I'd be risking 60. Okay, since it's 6.8, let's just say 70. I'd be risking $70. So that means that, yeah, I'm right. That means that this position you'll be risking $60 to make $1,670. This position alone, if you were to enter from there and it were to play out. Because another thing that would make this setup valid is the fact that we are on a series of higher highs and higher lows. Also, we have our first surge, second surge, and this could potentially be our third surge. It could potentially be our third surge. If you were to force it and put it here, this could potentially be a third surge, and we could see that bullish move all the way to the upside. And if it goes even crazier, that means you'd be risking $60 to make $3,800, which is crazy numbers. And if you were to get all the way up to here, you'd make $6,420 just risking $60. Like, how crazy is that? How crazy is that? How crazy is that? So yeah, that's it for the video. Thank you for tuning in. Thank you for tuning in, and thank you for taking your time to watch this video. And please click by again so that we continue building wealth and investing in our futures. You don't need money to do that. You need the skills. You need the skills because the skills are what are gonna pay you at the end of the day. So shout out to you who spent all this time watching this video, and I hope you got some valuable information and some valuable insights on what I just shared. And yeah, thank you once again. I'm out.